started with a little bit of a market update. The market update right now is that if we look at the stock market over the last couple weeks, it's been, somewhat flat. Let's look at it here. Let me bring up the chart. And let's look at it over the last 2 weeks. Or let's look at it over the last month anyway. Let's start over the last 6 months. Here we go. So we can see the crash. Everything was going along just fine. And then the crash happened here. We've had the bounce back. If I look to about 2 weeks ago, that would put us what? Right at the start of May, May 1st. And at May 1st, we were right about here. So you can see the last couple weeks have been really quite flat. What I would say is that it seems that the market has sort of found a bit of a top up here, but also a little bit of a bottom here. We'll see. So I think right now there's a bit of a battle happening between sort of the bulls and the bears. And, the bulls being people who are more optimistic and think that the economy is just going to bounce right back. And then the bears who are a little more pessimistic, who think that there's a chance that this virus is going to get worse and that things could actually, that the market could turn down and that we could have one of these sort of W type scenarios would be kind of I would say the bad case scenario. So there seems to be a little bit of a battle taking place, day to day. Today was kind of a funny day. Things started really down. I can show you just the S&P 500 just for the day. It started really down. So if we look at it like sort of here, the market started down today, but then kind of rallied a little bit. So it seems to me that we're probably just going to be trading in a little bit of a range until we do get more information. Either on, the science side of things, if there's good news, that'll cause the market to pop. Or if this thing's going to drag on, then I think that really I would be a little bit wary. In terms of market timing, I can see this question from Spirit Mail. Is now a good time to go in the market? I would say it's as good a time as any to throw a dart, right? That I wouldn't want you to go all in this scenario because I think there is a lot of downside potential. But what I would say is that, if it's me, I would feel a little bit cautious right now. That I think that, if we do look at that All Country World Index, and if we look at it over the last 6 months, that obviously the crash, this is when people were panicking and we were sort of in free fall and everyone was really afraid. I would say in the bounce back, things have turned and that people are now a little bit more hopeful. We're starting to see the economy open up. We're starting to see, these signs of hope that maybe it's not going to be that bad. That said, I'm looking at the science. I'm looking at this. I'm really, really worried about sort of a second case or a second, what do they call it? But this idea of, that things are going to get worse. That in terms of the spike in cases that we saw, that we could see a second round of spikes if we open up too soon. So I think everyone's just kind of going to wait and see. If I were you in terms of timing the market and going into it, again, it's not a bad time to throw a dart and maybe put part of your money in. That said, if it's me, I would probably hold off a little bit. Really the best assessment of where I think we are, there's this brilliant article that was super popular right at the start of this pandemic called The Hammer and the Dance. Did anyone see this article when it came out? This is from March 19th. So this is right when governments were able to, deciding whether to shut things down or not. And so, this was really this idea of the hammer and then the dance. And what I would say is that the hammer worked. Now, it hasn't quite gone down like this. I would say it sort of leveled off and come down a little bit. But, really what's interesting about this article is that I do feel that we are now sort of in the dance side of things. And let me just see if I can get it down here. The hammer, and then he has it here. So much information in this. And then the dance. And really, how does this dance works? Turns around something called the R-score or R-naught. This is going to be the rate of really being how the disease is spreading. So it's the number of people that each patient who has COVID, how many people are they spreading it onto? So you can see here that if the R-naught is above 1, the infections are going to grow exponentially. If each person infects more than one other person, right, it's going to continue to grow. If it's below 1, right, then this is where, each person is infecting less than one person. We can start to see the decline there. So really what's going to happen is we're going to need to get, this score, keep it below R equals 1 for as long as possible. What I'm seeing here in Ontario, this R score, this R naught is right around 1, about 0.9. Although that does include long-term care facilities where, that is sort of its own little ecosystem there. So if we sort of take that data out, it might be a little bit lower. But really the idea here would be, what are some actions that we can do to be able to keep the R score below 1? And so you can see here, there are going to be all these things. Some things are going to raise the R score. Some things are going to lower it. What I'm expecting is this idea of a dance where in all likelihood things are going to open up. This R score is going to go above 1. And then if it starts getting worse and we're worried and, it kind of hope turns to fear, then they're going to have to crack down again and it's going to go back below 1. And that we could be in this dance until there is a vaccine. If there is a vaccine, we just don't know. So this is my way of saying, when it comes to my market outlook right now, it's very clear to me that we don't have a V-shaped recovery. That's off the books. The best case scenario is this sort of Nike swoosh recovery where things are going to keep growing slowly and steadily over time as the economy reopens. What I'm concerned about is a W shape where it does fall, right? And that obviously if things get worse, then the stock market would fall again, and then it would take even longer for it to come back up. So I'm still in this period of kind of very certain in my uncertainty. I don't know what's going to happen. I feel like in the short term, things are going to be sort of, up and down, kind of in a range, and then we're going to wait to see more information. Thank you everyone for the questions in the chat. So I can address a couple of them. But really what the agenda, that's sort of the market outlook for today. Oh, I will address a couple things, on the market outlook before I move on. I do just want to show you the VIX, the volatility index. This is something I'm really keeping my eye on because, again, this is the measure of volatility. So you can see it was normal, and then spiked up, and then it has been coming down considerably. Got as low as like 27 over the last little bit, 27, 28. I would like to see the VIX below 20, would make me happy. If it gets down below 20, we'll see. I don't think we're out of the woods yet. I still think it's going to take a little bit more time before we are ready to get there.